So formal start. Yeah. So what got you guys interested in about like trading stocks? What got you guys interested to trade stocks or start trading at least? Try to like see what's happening in there. Let me just, grab my breakfast while you guys answer on the chat. But yeah, what got you interested about trading stocks? Or at least get into it. Alternative way of earning passive income. That's a good point, but it's a good reason to get into it. It's definitely passive in a way, but you have to watch it from time to time because you don't want to miss your buying and selling point. But it is a good way to earn passive income because you can put it in there and then just you know leave it there for a bit. And what were your perceptions about stock trading before you got into it? Anyone? Hello, welcome, Kyle. What's up, bro? But yeah, I was just asking if like about your perception on stocks before you got interested, or when you got interested. What were your thoughts about stock trading or stocks in general? Anyone? Okay. Um, well, basically, the stock market right now is obviously getting like I wouldn't say popular, but people are actually getting into it a lot more now, especially like with us, like the millennials. I'd say I think there's been an influx of people coming into the stock market compared to like the last few years where it's only a handful of people. And then when I started this, when I posted about it, I was surprised that a lot of you actually a lot of you actually started asking about it, messaging me about it. And so that's why I wanted to formally do this session, do these teaching sessions. I'll be having more over the next few weeks. So if you wanna come back and then get more in depth with this, I will let you guys know. I mean, you guys follow the Instagram, so I'll be announcing there. So yeah, about me. So my name is Japhet Arcedera. I'm a student still in UENP, University of Asia and the Pacific. I'm 26 and I'm still doing my undergrad. Um, and I'm taking up entrepreneurial management, which is not really, it's about business, right? But not really directly about all of these, stock trading, the economics of it. But fun fact, I used to take up economics in San Beda College or university now. But yeah, I transferred schools like a few years ago, and then now I'm taking entrepreneurial management. And I got my first um, taste in trading around 2009 or 2010. Um, and back then, I would ask my dad to like trade shares for me or buy shares for me because I wasn't old enough to open an account for myself. And like yeah, because like you would need certain requirements for that. You'd need like a tin account or something, and then you'd have to have like a bank account and whatnot. But yeah, I was like 15, 14 years old when I first started trading, and I would ask my dad to buy shares for me. And I would find these companies. I would study the companies. I would look into the things that that caught my attention back then. But then I didn't have like the tools and whatnot that we have now for like charting and everything. So it was tough for me to figure out what could I do, or like what am I doing, or how do I make this more consistent when I'm trading. Because when we were trading, I'm pretty sure everyone can relate. When sometimes when you start trading, you're just like, oh, let me buy this company, let me buy this company, and then hoping that it would go up the price, because that's one way to earn from stocks. But you're just hoping that the prices would go up without knowing why it could go up, or why it's going down, or how it could go up and whatnot. But yeah, so yeah, when I first started back in 2010, what got me into it was how do you call this? What got me into it was because I wanted to make money when I was younger, because my parents wouldn't always buy me the things that I wanted. And cool story from that is, does anyone remember this iPod Touch? Anyone remember this? Remember these iPod Touches? Anyone?
Yeah.
This iPod Touch. This iPod Touch is like the third gen iPod Touch that came out 2009 or something. I think it was 2009. So it came out 2009. I actually bought this myself, because like my parents would not, buy me certain things. When I asked for it, I was like, "Can I get an iPod Touch?" Because every one of my friends were getting it, because it was the in thing before. You'd have this, and then you have your Nokia phone. So yeah, so my parents didn't want me to buy it, or said that they wouldn't buy it for me. So I was like, I really want to get it. So I was like, I had money saved up, but instead of buying it directly, what I did was I invested it on stocks, asked my dad to buy shares for me. And then after a few months or something that I made like profit from it, I was able to buy this iPod Touch. So this is like my first big item, I guess, that I bought for myself when I was like 14, 15. But yeah, I bought that myself, and I guess I was I wouldn't say enlightened, but I was hooked onto the idea of trading and actually making money from it. But yeah, so delay of gratification is a powerful thing, because I invested it first instead of just buying it right away. But yeah, and it was not until this year though, um, in last June, that I really got interested into trading for reals. Like I was actually diving into so much things, trying to learn as much as I can. And back in June when I first started, well, obviously we had the pandemic going on, but yeah, back when I started, the market was really down, and I was like, oh wow, this. I've studied previous concepts. I've already studied things about the stock market beforehand, and then of course I knew that when the market is down, it's like the best time to buy, right? So I got into it last June, and then now the market is recovering, so I was able to be part of that uptrend, that recovery from the market. But yeah, so why am I why am I teaching now and sharing about the stock market? Well, I've always been passionate about teaching. I would say, like, I've always had an inclination to share about what I'm currently pursuing, or currently interested in. So at some point, it was kind of like a natural thing that I would lean more into sharing about what I know. And here you guys are. Uh, Thank you for attending. But yeah, it was the same for me when I was doing photography, when I was doing music when I was younger. Like I would be inclined to mentor those that were also interested. So yeah, I guess it's mostly about it from about me. If you want to ask more about all that side of things, you could ask on the chat. But let's move forward to the more boring part of this session, I guess. Well, not boring, just kidding. But the more technical part of this session. But yeah, I'll try to simplify like terminologies, concepts, I guess. But yeah, here we go. So the stock market, as most of you know, I think half of you already knows about the stock market, but basically the stock market here in the Philippines, it includes all the publicly traded companies. So you have like Jollibee, Ayala Corporation, you have those developers, the Mega World, Mega Wide, uh, all those big companies as well as small companies. If they want to be part of the Philippine Stock Exchange, they have to be listed. So there's about 329 listed companies that you could trade actually. So you could go into your broker and you'd see all of these companies that are listed that you could buy from or that you could invest in. So yeah, next. So how do we make money in stocks? Basic concept of it is through price appreciation. Like that if you buy 1,000 shares of Jollibee Food Corporation, for example, at 150 pesos, you're always hoping that it would go up, right? And then you would sell it and cash out, and then you'd make the difference, the profit. That's one way to earn money. And also, if you didn't know, like cash dividends. Cash dividends, you earn them through holding your shares before like a date that they have specified. I'll show you later about it. But yeah, before the date that they specified, if you're holding specific shares of that company, you would be entitled to dividends. They would pay you a certain amount. Let's say like for Jollibee, they might pay like let's say under 1 peso or 1 peso per share that you already own before like a date that they've given that they're rolling out, the cash dividends. But that's also a good way to make money if you're not going to be as active and if you want to be like an investor. It's basically their incentive to for you to hold your money in their company. Like you don't pull it out, like you just invest. Like even if it goes up and down, you're gonna be paid because you have shares. So they'll pay you the cash dividends. But yeah, so we have the PSE here, the Philippine Stock Exchange, and yeah, that's where I trade mostly. I don't trade internationally yet, so I'm focusing on the Philippine stock market first. It's what we have here, so yeah. So how do prices go up and down? Well, basically it's the economics of it, like the supply and demand. If you have, I'm pretty sure you guys have taken up economics back in high school or college. Um, you would talk about the supply and demand. When something has a lot of supply or everyone's selling it, the prices would go down. And then if a lot of people are buying it and it's in demand, the prices would go up. So that's what happens in the market when you have a company like Jollibee, and if something is in demand, the prices would go up because people would buy it at whatever price it is right now. Even if some people are selling, there would still be more buyers that are getting into it. And since well, the prices go up because, as we all know, there's only a limited amount of shares that you could buy, the public could buy. And I think I searched this up, and it was about 20% of the company's value, or like 20% of all the shares that the company has are the ones that are available to the public. So supply and demand, there's a limited resource, the exchange of shares. The more people who want it, the price would go up. So another reason why the prices could go up is, as I've said, the perceived value of stock. Like if they think it will go up, people would buy into it because they know that the company, for example, has a good future, and you're wanting to invest in that because you wanted to be a part of that future, and you know that the prices will naturally go up. It's kind of like with the Pokemon cards and the NBA cards, sports cards trading that is going on right now. If some of you are familiar, I know Kyle is. Uh, but yeah, it's like that. It's like trading cards, those sports cards. I don't know if I have a sample. Well, I have one, but basically the cards right now are trending. People are buying and selling those cards. Before they were just like a hobby, like collection. Now people actually buy and sell those cards. It's the same with you could I guess you could say watches or cars. You buy a certain specific watch, knowing that in the long run the value would go up. So stocks is kind of like that. So does anyone have questions on that part before we move on to the next part? Anybody? So that so I can gauge if you guys got that, if you want me to expound specifically on something. So before we move on, because it might have been too much. But yeah, if you don't have any questions, it's okay too. Okay, I see a thumbs up from Dominic. Thank you. All right, you guys got the basics of it at least. There we go. Yeah, that's a good thing to have at the back of your head when you're trading. But the more you trade, you just get used to it, and then you just the. I'll show you guys what the main things that I pay attention to when I'm trading. All right, so we'll move on to the importance of understanding stock charts. Okay, so who here has seen a stock chart or has been fascinated when you saw a stock chart and then you're like, how do I read this, or how do I, if it's interesting, but you probably were left like asking, how does this work? How does this move? We'll view it together later. But yeah, stock charts are like maps. They would show you the history and then of the prices. Like it would show you, well, I wouldn't say history, but like it would show you where the prices have been and where it could potentially go. Um, a disclaimer on where it could potentially go is we don't actually know where it would go, but when you're trading, you just have to. That's why if you saw my previous post, that's why I was talking about like having a strategy and whatnot, because the stock market is actually kind of risky, very risky. So if you get into it, it's not a simple, let me just buy this and hold, because prices could actually still go down even if you hold it for the next 4 or 5 years. Like sure, sometimes it could go up, but sometimes the value also comes down. But yeah, so if you understand the stock charts, it'll be like a map. It'll guide you um, will guide you about the prices that it could hit or the prices that it could go to, or and then you'll be able to see on the left where the prices have been the past month, the past year, the past day, or even like minutes or seconds. Yeah, they update that fast. So yeah, it shows you history. And then when you know or understand how to read charts, you'd be able to make trades that are not based on emotions or feelings or hunches. You won't have to say like, "Oh, I bet this company will go up." Like you'd actually know the reasons why you would be buying into that share. I mean that company or that stock, and then you would be able to analyze things for yourself, and you won't be swayed by anybody, like the hype of a certain stock. Like let's say Jollibee, or you heard someone talking about Jollibee, like, oh, it's good to invest on Jollibee. I'm not saying it's bad to invest in Jollibee. I'm just saying that, like, there are times na you just be inclined to buy a stock, if you didn't know how to read charts beforehand, or like if you were just trying out your hand on trading, you'd be inclined to listen to other people when they recommend a stock, for example. So basically, you'd be swayed on buying into that or selling too early, or like selling a share out of nowhere. But yeah, the goal is to be able to understand charts, the stock charts, and my goal as well is to be able to share something about that, because I I believe that it is very important to know how to read stock charts, because that's like knowing how to read in general. Like it'll make us more literate about trading. So yeah, and with stock charts, you won't be trading blindly, as I've mentioned. But yeah, so you'll be able to find the best price to buy at and the best price to sell at. Because at least, yeah, you might be able to buy now and then, without thinking about stock charts, but you wouldn't know how to exit. You'd be questioning yourself, oh, how do I get out of this trade if I want to take my profit already? All right. And to sum it up, I saw this great quote. It said, stock charts tell you a story. They cut through all of the rumors, headlines, and hype to paint an objective picture of what is really going on with the stock. So yeah, basically, as I've said, you won't be affected by rumors or headlines or any hype that is surrounding that specific company or stock when you know how to read charts. And as this goes on for, if you're willing to come back another session, I'm hoping to get into it more in depth, because I know most of you are new to trading, or at least trying it out. So if this is something serious that you wanna, pursue for the next few years, because I know I will be, um, I'm hoping to be able to hold at least a weekly session, if ever, or if not twice a week. The other session would be more on analyzing charts with me. But yeah, anyone here have like an Investagrams account? Investagrams.com. Anyone familiar with that website? That charting tool? Um, anyone? Are you guys doing a thumbs up? Let me check. Okay. Anyone familiar with that platform? Anyone? No? Okay. So if you don't already have one, I suggest familiar, but I haven't used it. Okay. Oh, Carol has. Yeah. Yeah. I saw a post from you the other day about it. But yeah, if you don't have Investagrams yet, I say go to that website later later after the session, or right now if you can, if it won't distract you. But yeah, if you go in there, you can sign up for free. It's a free platform to check about the stock prices, charts, everything you need is basically there. And it's basically like a social media platform for all the traders. So yeah, it's very good to have. And yeah, if you don't already have one, I suggest you sign up for it. It's free, and it's what I use. It's what I use every day. And then, because if you don't have a broker right now, you could get into this and you'd see stock prices. You'd see how many people, shares people are buying. So yeah, if you haven't opened an account yet, this is where you go if you want to practice your trading as well, because they have a virtual platform on there too that you could start trading in before you actually use real money. So it's a good place to practice at the same time. So yeah, let's move on to. I'll actually show it to you guys. I'll actually show it to you guys right now. Well, that's the end of my PowerPoint, because we'll go to Investagrams right now. Can you guys see my screen? Are you guys okay? Are you guys still alive? Yeah, I've been talking for at least 30 minutes now here. But yeah, this is what Investagrams is. Kind of looks like Facebook. Can you guys see it? Can you guys see it? Can you guys see this? I'm sure. Okay. Yes. All right. Thank you. But yeah, this is basically the platform do it. I mean, I have an account on this if you guys want to follow it. But yeah, are you guys making an account right now? Or yeah. Yeah, this is everything. The market will open in 10 minutes, 11 minutes, by the way. But yeah, this is it. You have your timeline right here where people are posting about, stocks that they might be interested in, other people's charts. It's kind of like Facebook, but for traders. But yeah, so we'll go right here in the chart section. I'm gonna show you what I see every day. So basics of stocks. You have, why is my internet slow? Hold up. Yes. Okay, basically here. So you have the Philippine Stock Exchange Index. So that's basically the cumulative movement of the market. So it's an index because they sum up everything from all these companies. Yeah. So you can see all the companies here and all stocks. There's a lot of them. There's 300 plus. So yeah, you could trade all of these stocks. They have these. Let me go to my chart, my illustration chart. Okay, here you go. So you have this, you have the name up here, right? You have the name up here. You can see it's Jollibee. I don't know. No, everybody loves Jollibee. Everyone knows Jollibee. So I'll use this as an example. But yeah, so we have here Jollibee. And essentially, if you trade stocks, you won't have to like search for the full name of the company. They have these things called the ticker symbol. If you're not familiar, it's called a ticker name or a ticker symbol because you could just type it here, like let's say JFC, and you'll see the full name. Or why is it a JP Morgan? The full name, the full name of the company. If you know SM, SM also has one. You have Globe. Globe Telecom is GLO. The stock ticker, stock symbol is GLO. And then if you know Ayala, it'll be this. So yeah, you just have to like familiarize yourself with the stock ticker name or like symbol. But yeah, over time I just you know sort of memorized it. But yeah, there's definitely a list of it right here in all stocks, so you don't have to memorize it all. But yeah, it's good to have some companies that you know, and then you search it here. It'd be like ABS, CBN, or, yeah. So you have the ticker name right there, and then these are all the you can see the prices that it went to the day before. I think, yeah, this is the day before, the day prior. Also, how it opened, the high of the day before, the 52-week high, like all these numbers, right? Could get too much for you, but you mostly pay attention to how much it is now, which is, I have it here. I don't know if you guys have your charts on. Do you have your charts on? If someone has their charts on, if you see it on there and search JFC, you'll be able to see this price right now. It closed at 204. This was the price that it closed last Friday because the market is only open from Monday to Friday, 9 a.m. to like 1 p.m. So you have the closing price right here. It was 204. And as I've said, when you're able to understand the stock charts, you could see the previous prices. So this is all everything it has gone through since the beginning of time, basically. or since the beginning of the company. So yeah, basically you could see all these information about the stocks. So let's go to the daily. The daily. How does it look like on a daily time frame? The time frames are basically just how fast the candle is made. So I'll also talk about that in a bit. But yeah, for now, so you saw that the prices. This is what I see every day. This is what I pay attention to every day. The prices, the bid and ask, the volume. But yeah, so as I was sharing earlier in my presentation, if you bought 1,000 shares, right? When I talk about price appreciation, uh, how you can earn from stocks, right? Let's say you bought at 150 pesos. I gave that example. You'd be 1,000 shares. That's a lot of shares. That would cost you 150,000 pesos, right? If you bought that when was that? Last October 19th. And if you just left it there, last, when was it? December 9, last week, or earlier this week, last week too, later last week, you could see that it got up to 208 to 210. So basically, um, the way you profit from that price appreciation movement is, how do you call this? So you calculate the current price, which is at 210, right? Let's say you sold at 210 and you had 1,000 shares. If you're not familiar with this yet, so you actually made 210,000. Your capital, I mean, grew to 210,000, and then you subtract how much you bought it for, which was 150,000. For 1,000 shares, you would have made 60,000 in the past. How many months is this? October to December. So like October, November, December. In 2 months' time, you basically made 60,000 if you just happened to buy it last October, and then you sold it at 210 because you were happy with it. You're like, okay, let me just sell this at 210. I'm happy with that. But yeah, so that's what I look at. And so let's move on to, anyone have questions? No? Anyone have questions about anything specific, technicals, when it comes to this, what you see on the screen? Um, I'm waiting for the chat. Everyone good? I need this. If everyone's good, then I could move on to teaching how to read these candles, because let me just switch up my candles so you can see it better. So if you have an Investagrams account, well, your stock setting would be having green candles, I think. Let me just open. I think you'd have green candles and red candles if you open your own account. How do I reset this to normal? Yeah, let's just switch it to like a green one and then a red one. Okay, so you can see. Oh no. Oops. Wait. I focus on hollow bodies. Okay. But yeah, in your chart, if you signed up for one, yours could look like you could have a green candle right here and then red candles right here. But for mine, the up, like the up moves, or like the price is going up. I have it on white right here. It's just easier to see for me. And then black when it's going down. So essentially, let's, let's clear this. Let's clear this drawing right here. Let's go to another company. Let's go to Ayala, for example, just to have a clear chart. Okay. So yeah, each candlestick represents. So I'm on my daily time frame. I'm on a daily chart. So one day, every day, it will make one candle. So essentially on an uptrend, like the price increasing, you'd have these white candles, right? So how to read this, if you're not familiar, is you have the price open at this price point, like at 35, and then you have the closing price right here on the top. If it's a white bar or a green bar in your case, for the stock version. Wait, hold up. So yeah. If I could find, I don't know if I could find the reset button of this, but I would love to reset my chart. But yeah, so how to read the candles is you have the price opening here at the bottom right here, price opened right here, and then the price went up here on the same day because I'm on a daily chart. If I move down to 1 hour chart, so that's same time frame. Where did my so oh here's my chart. So yeah, you can see here in a day, in a market day, you have 4 hours, right? So in that one bar on a daily time frame, in a 1 hour time frame, you'd have 4 bars right here. So you're getting more detail the lower time frame you go. But let's go back to the daily time frame. So yeah, you have this one candle. How to read it is, yeah, you start from the bottom if it's a green candle, and if it's a red candle, you start from the top, and then you'll see like a red bar or a black bar going down up to this point. So this means that it closed at this price, it opened from here. And then you might be wondering, like these candles, right? They have these small things right here, the wicks, these wicks. That means the price went down here, but the price closed up here, and it's still black because overall the price, I mean the stock value lost like a few, I don't know, cents, I think. But yeah, the price went down. Like let's say this candle right here, you basically opened right here at 39.97, 39.99. You went up right here, but it went down here, and then it went down here to like 38 pesos per share. And then you had this candle wick at the bottom because the price bounced back up. So if you go down to a smaller time frame, you might not have those wicks because it'll just show as a bar. But yeah, that's the basics of it. um, any questions pertaining that? Because I would have loved this if you had mics on and then you'd be asking questions straight up. But yeah, am I making sense? Like, I mean, that's the basics of it. On a white candle, or let's say a green candle, let's say, let me switch back to my, so you can see it better. Let me switch back to my candles right here. Let's make it green and red. Okay, there you go. So basically you have these green candles, right? Is it better to see or easier to see right now? But yeah, let's say Ayala price on this day. Let's say, what day is this? November 10. Yeah, the price opened here, and then the price went up here, closed here. So that's like a big, strong move, and you gained about 7%. So yeah, you gained 2 pesos, 61 cents right there on that one day. But yeah, does everyone get the basics of it? I'm checking chat, and I'm also checking the thumbs up. Okay, yeah. So that's the basics of it. So it creates a new candle every day for this time frame because you have multiple time frames, right? Uh, for me, my favorite time frames are the 15-minute one, the 1 hour one, and the 4 hour. 4 hour is basically the daily time frame because we only have 4 hours anyway on the market here in the Philippines. So if I go down to 15 minutes, you'd see a lot more movement, a lot more. So I drew this, right? I drew this, and in the daily time frame, this was just essentially one bar right here. This whole thing, this was a one red bar movement. But if you go down to the 15 minutes, What happens is every 15 minutes, there's a new candle. So one of these candles will form every 15 minutes. Same with hourly. If you go to the 1 hour chart, every hour there would be a candle here, then it would finish here. Then next hour, you can see on the bottom, 10:30, the market opened at 9:30 right here. 10:30, you'd have a new candle because every hour it refreshes. It draws another candle. So yeah. So basically, if it's a green candle, just to recap, it opens at the bottom and closes at the top. If it's a red candle, it opens at the top, closes at the bottom. And then the wicks are basically the prices that it hit, but it didn't stay there. So it went down and it closed on another price point. So yeah, like this one is a perfect example. This might have been green when it was starting the day, and then it just finished down here, but it opened right here at the top of the bar, at the top of the candle. So yeah, we call it the candle. I'm not sure what the history is on the of it, but we call the main body a candle, and then these are the wicks, the candle wicks. So on the body of a candle, as I've said, the price is open at the top. If it's red, the price open at the top part of the body and it close at the bottom of the body. And if it's a green candle, it open at the bottom of the body, close at the top of the body. Yeah. Basically, it moves from down here to up here if it's a price appreciation. And yeah, you could have essentially made money from this movement right here when it went from how much is this 36 pesos to like 40 pesos in that span of 2 days. Wow. Okay, wow. 2 days you gained 4 pesos. So let's say um, you had 1,000 shares, for example, times 4 pesos per share, you essentially made 4,000 pesos in 2 days. So that's not bad. That's not bad at all. Good movement for Ayala on this time frame right here. But yeah, let me clear it out. So yeah, does it make sense? Do you guys understand it a little bit more? Just feel free to comment if or or say it on the mic if you prefer to do so. But yeah, so if you're just starting out and you don't know where the price could go, or like if you're buying at the right price, the stock charts are the best place to be at with that. So yeah. So at least now you know when you look at the charts, oh wow, is this a good price to buy it at? Is this price fair enough for this company? And then how much upside do I have? How much room for price gain do I have? So yeah, has gained about 40% since. But yeah, that's why it's important to be able to read stock charts. So if you don't have any questions, I'll move on to my next topic. I hope I'm not going too fast, but then in a way, I guess you could practice reading it. That could be your homework, I guess. You could practice reading it and seeing the price movements if you've signed up for Investagrams. Because if you don't have a broker, because some brokers have charts with them, but they're not as powerful as this one. So I like to have, more tools at hand and illustrations that are slightly better than the ones they gave you with your broker. So who here actually has a broker already? Who here has an account already? Anybody? Anybody have an account already? Before I move on, let me just set up. Uh-huh. So yeah, mine's Cole. Oh, so you have Cole Financial. That's a good broker. That was the top broker for a bit, for a while. But yeah, if you already have, oh, you have Cole. Okay, that's good. I'm not sure if they have charts. My brother has coal, but I don't know if they have charts there. But yeah, coal is really good. It's one of the top ones. There's coal. I personally use Metrobanks, like the first Metrosec, and then I also use Phil stocks. It's just preference basically, or where you have a bank account at. But coal is not with a bank, but yeah, they used to be one of the top brokers out there in the Philippines. But then recently, there's been a lot of complaints about it. I've been hearing a lot of complaints because sometimes it lags. I don't know why, but probably there's server issues with their website. But yeah, so let's head back. Let's move to the next topic if you guys are okay with that. Are you guys okay with that? Can you guys still, do you guys, get everything that I'm saying? So yeah, that's basically the basics of candlestick reading. Candlestick, yeah, because all of these are candles, as you can see. Like when you look at a chart, all these bars are candles, 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 candles. For me personally, I don't like having colors on mine because sometimes it makes me emotional. Makes me more emotional if I have, like, let's say a green candle and a red candle on the down, because I'm seeing, oh no, the price is going down, the price is going down, should I sell, should I sell? But yeah, let's talk about the faces of the market. So yeah, let me just type it here. Faces of the market, or market structure. I'm such a slow typer. Market structure. My screen is cramped. Okay, let me just hide that. So yeah, faces of the market are market structure. If you're not familiar, the market usually have three faces. Three faces. So the we have here the the downtrend. This is basically categorized with lower prices, like prices going lower. And then you have the uptrend. And I know why. If you look at this part right here, you should be able to tell why it's called an uptrend. But this one might not be so familiar with you. This is like the consolidation contraction part or phase. So essentially, on a downtrend, let's focus on the downtrend right here. Let me just zoom that in. Okay. So you have the downtrend right here. So you guys can see it properly, right? I feel like I'm moving too fast, but I hope I made it simple enough that you will be able to get it. But yeah, a downtrend is basically categorized as, having, this is a, how do I describe this? Having like lower highs. So basically the prices went up here. It's called a high if, it came from a specific part of the chart, for example, right here, which was a lower price, right? The price was way down here. So I would call this like a low. And then it went up here. So it could be categorized as a high. But then this was like a day where it just rallied. It just went up. The price went from, oh, this is the index. It went from 5,000 points to basically 6,500 points. But yeah, this is the entire Philippine Stock Exchange, if you're not familiar. So yeah, you had this entire thing move from a low right here, the low in points or low in price, and then move up here to this high, right? What's this here? So basically, when you have this high, and then it fails to reach that high again, because as you can see, it didn't reach this part again. There's like a price here that it failed to breach. So this was the highest point. This is basically the peak. And essentially, if you have like this, the price went down here. It's like a lower low because like this price was right here. So this would be categorized as a low, like a new low, because this was a low, but this was like a higher low. But then on this context, on a downtrend, this would be a lower low right here at this point, because this was the low, previous low, because the price went from down here to up here, then the price pulled back, like retraced backwards. It went down again right here up to this point, but then it bounced up. It bounced up right here to like right here. So it went from this low at 6,000 points to 6,300 points. So yeah, it created this lower high. It's called a lower high because it failed to breach this previous high, like the highest peak since, let's say, June, like the closest high. Usually what you would do is like look at the closest structure on the left, because the right candles are always just being written. Like let's say right here on this day, the candles are just being written right here, and all the previous days would be all these candles. So at this point, basically, when you had this high on June 9, it's right around the time that I started. So the market was actually going down. So it was categorized by a lower high, because this was the high, lower high, and it was creating lower lows. So it went on a low right here and then beat that low. It actually, how do you call this? It beat this low right here because it made a lower low. So essentially, if you are watching this low, because like let's say this hasn't happened yet, right? This day hasn't happened yet. So if you saw this, the candles being made right here at the right edge of the screen, you're looking at this, and then the prices are going down, and then the price bounced back up. So it started going up, started having green candles. So you're like, huh, this is the bottom for this retracement right here. This price, the price going back down. So you're like, you're watching this point. Is this gonna be a place where the price stays at and then bounces up? But then over the next couple days or weeks, this is like on a span of 2 weeks, it broke this low right here. So it created like a lower low. So essentially, you're gonna, on a downtrend, you're gonna see something like this. Yeah, because you will never see like a perfect, just a line going down like that in the market. It's always gonna be like, a pullback, a downward movement, and then it's always gonna be like, yeah, it won't just straight up. Let me just clear that chart. Sorry, it won't just straight up. How do you call this? Straight up go down like that. It would be like a slow movement. Like it'll go down, people will be interested in buying. It'll go down again because uh, more people are selling. So yeah, if it's a downtrend, it means that there's a lot more people selling. So we call those people selling the bears of the market. History of this, I'm not sure why it's called that, but they say a bear attacks downwards, so that's why they named it as a bear. Like this downtrend is called like a bear market. So we have a bear market because like the bears are taking over. So you have more sellers basically. In a bear market, it's categorized by more sellers than buyers. So this downtrend right here, categorized by the higher lows. I mean lower highs. This market is essentially called a bear market because it was going down, creating lower prices and lower prices and lower prices. And opposite that, you have the uptrend, which is uptrend, or it could be called the bull market if you're not familiar. But yeah, I'm pretty sure you've heard the term bulls. Like the bulls are taking over, like the bears are taking over for a downtrend. But yeah, the bull market is categorized with, more buyers. than sellers. The prices are going up. Yeah, and then you'd have essentially green candles right here. I keep changing the candles. Yeah, you'd essentially have green candles on the charts, more green candles basically on an uptrend market. Yeah, and it's creating a higher high and a higher low. So basically the low was right here, the low started right here, the low started right here, but then it didn't go back down there anymore. So it created like a higher low and then a higher low right here. Because like the low of the charts, I'm not particularly sure why they call it a higher low, but if you keep going up, right? If it keeps breaking this high, for sure it will create like another high. And then every time it pulls back, oh, there we go. That's why it's called a higher low. Every time it pulls back right here, the price went back down, right? It would create this point where it bounces immediately, but then it never touches this point again. So it's essentially creating like a higher low right here because it never went back down to this level anymore, to this to 6,200 points. So on an uptrend, essentially you're creating, even if with the prices going down, you're creating higher prices than the previous uh, low. Like your lower prices are higher than usual, and then your higher amounts are definitely way higher than the previous high right here. So if you were trading from October 19, you'd see the highest price to be um, let's go to JFC. An example right here. If you saw on October 9, 16 right here, so the prices were right here, right? Uh, when you're watching it every day, you see the price go up to this point right here. So that created like a high because every price was just at this bottom right here. So it created a high, but then the price pulled back down, pulled back down. So essentially the price created like a low right here. But then this is a higher low technically compared to, I'll use HL for higher low. Essentially this is a higher low because it's higher than this low right here. So you started with a low price, then it created a high price. Since the price went back down right here, the price went back down right here at this area. Let's just use this arrow. So at this point, the prices back down, went back down, but then the prices went back up right here. So yeah, this will create a new high because a higher high, because as you can see here, it broke this high, this level of high. This have level of, I'll use HH for higher high. So yeah, this price point right here, Jollibee was at, what's this price? 178. But then the following month, it created a new high. Excuse me. It created a new high because it broke this high. So essentially, on an uptrend, it's just the opposite of a downtrend. You're creating higher prices over time, hence the uptrend. So yeah, you're creating higher prices right here and higher prices right here. So yeah, and then what I like to do is have these things uh, called trend lines, right? And what I would do is I would connect this bottom right here with this point. So essentially, before I go to the consolidation part, on the faces of the market, what I like to do is connect these dots right here. So if they have like a low right here, if you have a low right here and another low right here, basically if you have 2 or 3 points, isn't it in math where they say like if you have 2 or 3 points, you could make a line or something? So yeah, it's the same with charting. If you have 2 or 3 points that you could connect, you could basically draw a line with them. So that's why I had those lines. But yeah, So let's go back to the faces of the market. So yeah, as you can see here, that's why I have a line right here, because I connected these dots. Basically, it's like connect the dots. Stock market is like connect the dots. So you have here, you connect both the lower high and the higher lows right here at the bottom. If it's an uptrend, if it's an uptrend, I'm like, if it's a downtrend, I mean, I'm looking at the highs, and then is it creating a lower high? So it means the prices are going down if it's creating a lower high. So I connected it on the top part. So yeah, I connected here at the bottom part if it's an uptrend, and I connected on the top part if it's a downtrend. So yeah. So what do we have here? The last portion is this one, which is the consolidation. Let me just zoom in, turn off that auto. So you have here the consolidation. You might ask why it's called a consolidation. Well, the prices are failing to create, usually in this time of the market, like the face of the market, in a consolidation. I'm not sure if you guys are taking notes, but in for the higher for the uptrend and the downtrend, but we have here the consolidation phase of the market. So in a consolidation phase, essentially, um, the bears and the bulls. So the bulls and the bears are having a fight, right? They're fighting for this space right here. Um, so the bears and the bulls are basically like failing to take control of the market, failing to take control. So the prices would be in a specific. If you could screenshot it, you feel free to do so. Specific high and specific low. So yeah, right there. So yeah, as you can see, what I said earlier, it would be creating a higher high, right? If it broke a previous high right here. So it created a higher high right here and a higher high right here. But if you have like a consolidating market right here, like for this one, for example, you have these highs, you have these multiple highs right here, another high right here, another high right here, another high right here. But as you can see, it's failed to break this mostly until this part when it became an uptrend. So in a consolidation part, a consolidation phase of the market, you have these highs and then you have these, these bottoms right here, and they're all like bunched up. So it would go to these price points right here as I've connected on the red part. Let me just clear that up. So in this red line, as I've said, I would connect two or three, two or 3 points. Basically, if you connect 2 or 3 points with a line or like a trend line right here, or how do you call this line? But yeah, it's a line, a trend line. So yeah, I like to use a trend line right here. So yeah, I would draw this line on the top right here, um, uh, on the points where I see it failing to break the price at. So let's say I was watching this on August, right? So I created this low, but then it bounced back right up. So you're like, oh wow, it created this low in price, but then the price rallied up here. So you're like, wow, okay, that's something you take notice of. So you're like, wow, so it reached this previous low, right? So if this was a low price, but then it went back up to that price, so you're like, huh, is this a potential for like a market going uptrend if you were coming from a downtrend? But it made this high and then the price went back down. And this went on for August to like October, where you get this high, right? But then retest this, you go back to this price, this low right here, at this point. So you're like, the whole market went down, back down here again. So you're like, okay, so you now have 2 points where you're looking at, because essentially if the price goes down or like the index goes down to a price point, I immediately like put a line right here and be like, okay, that's the lowest it has gone since the last time. because you're always going to look at the left. You're always going to look at the left. In the left part, you're always going to ask yourself, did it make a higher high or a lower low? Or did it make like a, did it break any of these previous structures? Because if you're looking at this price point, you're like, oh, it broke this previous low right here that you have taken note of. But yeah, so having these multiple points right here, that creates like a support. We call it the support. I don't know if you're familiar with the support and resistance concept, but yeah, essentially I would call it a support area when a price goes down to a specific price right here. Let me just like clear that up. So let's say the price went down in this area, right? But it stopped going down right here in this area. So I pay attention to that price point right there. Um, and then it rallied back up. So I'll be like, okay, that's an area where it responded, the market responded, and it went back on an uptrend right here, a small uptrend right here. But then after hitting this point, it just went back down again. So you're like, okay, this is a high, this is a low. But then what happens is if you have prices or like points here that were tested more than once right here, it becomes like a support. So basically, it's holding up this entire structure. The sellers cannot break through this price anymore. So that's why it's called a support. So basically, when you have, I said on a downtrend, you have more sellers, right? But then when it came to this point right here and this point right here, the sellers couldn't break it. So essentially, it became like a support. But at the same time, on a consolidation phase, you have the resistance right here. It's called the resistance because it's the opposite of a support. Like basically, it's a ceiling. If you have a floor, price, floor right here, you have a ceiling price for here. And if it gets tested multiple times, like it did right here, 1, 2, and then finally after testing it for the 1, 2, 3, fourth time, it was able to break out of this set of specific price range. Did I say? So yeah, I think I noted this. Yeah, specific high and specific low. So finally was able to break out after testing it like 1, 2, 3, 4. So finally, uh, the bulls or the buyers have taken over at this point right here. So yeah, at this point, the bulls or the buyers just really took over. So yeah, in a consolidation phase, it happens when consolidation phases usually happen when you have a downtrend or an uptrend, but then everyone's undecided. So you're like the bulls or the bears are failing to take control. So you see a consolidation phase when that happens because you're like the prices aren't going down beyond this point, and the prices aren't going up beyond this point. So it basically becomes a range. So it becomes a range. So you just have like these specific highs and these specific lows that aren't broken. So yeah, basically it's a foundation, the support for an uptrend. So you're like, okay, the price is failing to break this. You might be like, okay, so I know that the price might not break this, so maybe it's time to buy into this. Because in the Philippines, you only make money when it's going up, the market is going up, right? So yeah, if if it's going down, you essentially just lose money in the Philippines. But abroad, you have another concept called shorting, where you're betting against the market. So you're like, if it's going down, if you're shorting the stock, you can make money when it's going down. But for us, it's more simple, I guess. More, yeah, simple, but still kind of complex. You only earn from going up when the prices are going up. But yeah, does anyone have questions on that before we move on? So yeah, in this part, like the downtrend, just to add on to that, in a downtrend, you also have supports, right? When it's going down right here, because we don't know how low the price could go. So you saw the price move down right here. You'd be like, is this a potential place for support, right? Because you're like, you saw a low, but then it bounced back up. and it created a lower high because it failed to beat this high compared to like a consolidation phase. You're like, goes to a high, goes back down, goes to the same high, goes back down, goes to the same high, goes back down. So yeah, but on the downtrend, you're like, goes to this high, goes back down, but it didn't reach this high again, so you can't call it a range. So that's why it's called a downtrend, because you're creating a high right here and a lower high right here. How do I have this? Yeah, so basically this is a high, and then you get a lower high because it failed to touch that again. Let's say this became a support, right? This became a support. Every time there's a price that it goes low at, like there's a low price that it reaches and then bounces back up. Another scenario here, if the market was good, would be the price goes down right here, and it goes back up here, right? And then it goes back down here. So now this is actually support. What it did was it created a lower high. It did create a support right here, but the market wasn't that good, and the sellers were still like um, controlling the market. So what happened was it broke that support. So that's why you created like a lower low right here. And for me, after it creates that lower low, right? So now you're looking at this price point, because I would draw like a line right here. I would essentially draw a line right here, because I'd be like, the price failed to break this. That's the lowest it has gone to. And then the next couple of days it goes up, but then the market, didn't let it. The bears didn't let it just keep going up, like this one, like this part right here, just kept going up because the bulls were taking over. So yeah, when you see these supports, you're like, oh wow, okay, these price points were failed to be broken. So now I'm looking at that as a good part. I mean, a good support for that. Yeah, so you have supports right here too. You also have support right here, but then the market rallied anyway because it's an uptrend. So it just broke it right away. Like you have a support right here. So you'd be like, okay, on an uptrend, you'd be like, okay, that support price went back down here, but it reacted. So now you're watching that support. But then what happens is if you're in an uptrend market, most often than not, it doesn't come back down here, the price, because it's in an uptrend. So you'd most likely see an uptrend if it fails to retrace the support that you've drawn. Because we don't see it. We don't see what's going to happen in the market. I mean, you're not going to know what's going to happen. Why is it still doing that? You don't know what's going to happen today or tomorrow. But yeah, any questions on that before I actually show you guys what's happening? So yeah, see, I drew this trend line. When did I draw this? Like last week when I was preparing this. So what I did was, as I've said earlier, you get like 2 or 3 points that you could connect, right? So I knew that this was an uptrend because I was seeing this support right here, and then it just rallied up, like it just bounced. So basically, what I did was, if you just came in today, for example, you're gonna look at this chart and be like, okay, so it has created like this low, higher low from here compared to this part. Then it created another higher low. And now for me, it's like, oh wow, okay, it created higher lows. So I could be like, I could connect this. So I connected this point and this point, and it happened when it happened, because like you got a reaction from this area right here. So basically you got a reaction from this price. If we're looking at, let's say, okay, let's go to JFC so you can understand it better. So yeah, I mean, JFC and the Philippine Stock Exchange kind of have the same chart because JFC is one of the top companies. But yeah, so you're looking at this and being like, let's say you just came in the stock market today. You're looking at this and you're like, okay, here's the lowest price it went to, and then there's another low price that it went to, but it's higher compared to this part. So I'll be like, okay, let me just connect the dots. It's like drawing essentially. So now you're like, okay, this trend line that you drew could become like a support. There are horizontal supports, like I showed you earlier, right here, where the price went up and then the price went back down again. We tested that, but then that's on a consolidation phase. Usually, this horizontal supports are more on the like the, how do you call this, a consolidation market phase of the market. But then when the market goes on an uptrend, uh, you're gonna create like a support right here, a trend line support. I use the same trend line right here. You're gonna create like a higher low, so it's gonna be like something you could connect. But yeah, so what happened here is you could draw a trend line right here, right? It'll act as a support. So let's say 1 week from now, you're gonna be like, is this price, actually we're on a trend line right now, right here. This price, this candle right here, it's being drawn because the market is live 30 minutes, 40 minutes ago. So like basically we can check right here, 15 minutes time frame. So I said 15 minutes, there's more candles, right? Why did my chart shift? Well, yeah, essentially when you have this right here on the daily, this is gonna move. So now it's on the trend line. So essentially, it's gonna. I'm hoping that this trend line that we drew from, when was this? December 1st. Let's say we drew that December 1st. This trend line, because let's say we didn't have this candle right yet, right? Let's say we didn't have these candles on the left yet. So you'd be like, okay, this point and this point, after a few days, you're like, this price point reacted. At this point, it reacted at. So you could be like, you do this trend line right here. So that's how you know it's a higher low. Because you're like, okay. And then towards the future, as days goes on, I usually just extend this line right here. And then now we're looking at the prices and we're like, oh wow, it just basically broke it or it's on it right now. So what I'm expecting is it reacted at this point, it reacted on this point. What I'm expecting is for the price to react again at this point since it's hitting this trend line. But yeah, that's another tutorial that, or another thing I could share. Yeah, drawing trend lines. Let me just like get a feedback from everybody. Like, do you have any questions? Or do you understand everything? Because I might be like going too fast for that. So yeah, so I said I like drawing supports. I could use this horizontal line. So there was a price right here that it tested, and there's another price that it tested right here. So I'd be like, okay, price failed to go back down in this area, even if like it was attempted once and then twice. So I'd be like, this is definitely like an area where people are watching it and being like, should I buy at this area? Should I go in to this stock at this area? So yeah, basically we're like accumulating all the things that I've talked about earlier. Um, yeah, knowing how to chart, you know specific prices where it's worth it to buy, specific prices where it could, potentially increase in price over the next week or months or so. So yeah, had these price points right here last November where it was rallying up right here, right? It was rallying up in this area, but then the prices went down twice right here. On a 4 hour or daily time frame, it might look like a small movement, but if you go back to like an hourly time frame, you're definitely gonna see more information. So every hour, the price would go down, and it actually created a what right here? a lower high. So it was like a mini downtrend within this chart. So you had a mini downtrend and an uptrend where the prices down, went down at. The prices went down at right here. It was going down, right? It was going up here, but went down. But then, as I've said, if let's say it pulls back down on this price point right here, you're expecting, if you have like positive hopes, you're expecting that like, oh, please let this be the support because we don't know what's going to happen in the next few hours here that happened right here. Well, it's easy to tell that this was a support because, you know, it was already written, like the candle was already written. But you have today, which is ongoing right now, which we could dive into in a bit. But yeah, I have I'm on an hourly time frame. There's basically a clock right here. It'll draw another candle in 15 minutes. So because it draws a candle every hour. So this is what has happened so far right here. So essentially, if you were right here at this point in time, you wouldn't know what the future would hold. Um, if you did, you'd be extremely rich because you could just buy at the perfect time before it rallies back up like this, like before it goes up again. But yeah, you know, you're thinking, the psychology of it is like, okay, there's this point where the price pulled back down, but the price pulled back down and then it bounced up right here, right? But then it reacted again and then the prices went down. So you could be like, okay, this was a high. This was a high, the highest point before. This was the high for that run, for that. This was the ceiling price essentially for this run right here. And then after the next few hours, it failed to touch that again. So you're like, okay, it's creating a lower high right there, lower high, lower high, lower high until it retested this support again. So for the support and resistances, as I've talked about earlier, um, those are the price points where it's the lowest and the highest. So if it fails to break that and it just keeps going sideways like that, like sometimes the market, as you saw earlier, would go like this, would go like an up and down, up and down, up and down. That would be like a specific range. But for this case, it had like a mini downtrend before the price reacted again at this support. So essentially what happened was it tested this support again. And if this was a ranging market, like a consolidation phase, you would have the price reach up to here, which it did. It did reach this price point right here. It did. Hold up. How do I delete this? Okay, so let me delete that. So this price right here, right, you'll be drawing this. What I do is, let me just clear this chart. Let me just load it again. So for me, my analysis would start as like, where are the areas that, let's say you don't know yet what's happening in the future. So you're like, where did the price react to at this point? So from the previous week, I've had this trend line drawn, right? Well, if you were here at this point, you wouldn't have a trend line yet because you need at least 2 or 3 points. If it's 2 or 3 points, I'd say it's a strong like point of support, price point right here. For example, at 132, it held as a support because it tested that low, and then another time it tested it, and then it didn't go down way below it right here. It didn't go down further. So it stopped it from going down. Basically, the supports are the places where it stops it from going down. But if in an uptrend, you're creating higher lows. So the trend line that you've drawn basically is acting as a support. But you'd have like horizontal supports right here because you're going to ask yourself, where did the price go back down to? Where did it hold before it's rallying up again? Rallying up again right there. So yeah, any questions on that? And then we could look at the live market now. And if you have questions or like a specific company that you have in mind that you want to talk about, that you want me to talk about, feel free to do so. Are you guys still awake? uh, this is like so much to comprehend. I know, but yeah, I hope if I mean it's been an hour and a half, I guess. Uh, if you could turn your mics for a bit and then share something or ask something that you might have a question on, that would be perfect. Just so I could gauge what you got from that or what I need to expound more on. So yeah, that's the basics of trading. I'm not even that's the basics of charting. I mean, I'm not going into like patterns yet or strategies. I'm just talking about like the support and resistances. So what did we learn about today? Let me just sum it up. So we learned about the phases of the market, right? We learned about, well, first we learned how to read a candlestick chart. This is a candlestick chart, by the way. Yeah. So we learned how to read the chart. Number one, that's what we learned. Number two, I shared about the phases of the market. There's usually three phases, which is the downtrend, the consolidation phase, downtrend, consolidation phase, and then the uptrend. Downtrend, you're creating lower highs, meaning it's failing to break the previous high, and then hold up. Yeah, downtrend meaning it's failing to break like a previous high that you've seen right here, previous high, and then it just suddenly goes lower high, and then yeah, you can see it's a downtrend essentially. And then for a consolidation phase, you have these specific highs. You're like, okay, it's not a downtrend anymore. There was a point where the price went super low, and but then it started going back up again. So you're like at this point, you're like, okay, that could act as a support. So we learned about support and resistances, and it becomes a resistance when you have multiple highs that are being like tested and retested and hit again, but it's failing to break out of that high. So yeah, that becomes a resistance. That's why it's called a resistance. And then it becomes a support or a floor, price 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 floor when uh, when there's a it fails to hit. I mean, it fails to break this bottom prices right here. So yeah, and then it becomes a consolidation when it just keeps hitting when it just keeps hitting these highs and these lows. And then you go on an uptrend when the highs keeps getting broken, like uh, this one, the highs were broken by this high, then this high. If you're gonna put a resistance right here, essentially you saw the resistance being broken by this point right here. So you're like, okay, it's definitely on an uptrend right now. So yeah, that's it to be summed up about these resistances and these supports and lows and highs. So yeah, what else did we talk about? For now, that's all I want to share, and then we could move on to like you might be asking like how can I pick the right companies, right? You have 300 companies, but yeah, let's like take a break for a bit just so I could interact with you guys. So no one still has like a question. Like you can open your mic, ask a question about it, about what we've learned so far. Nothing? Nobody? There's like your water. So yeah, that's it essentially. Do you have any questions? Oh, going back. I remember I talked about dividends, right? High question. We are so shy. Okay. But how do you put? Well, this is actually a great question. Um, one of you asked, how do you put money in stocks? Okay. That's a great question. Like if you want to start, right? Okay, now you're interested in starting, you want to start. So basically, you're gonna have to open an account with a broker. So I could show you guys my broker, my personal broker right here. So essentially, you guys can still see my screen, right? Okay. So essentially, brokers in the Philippines. Um, a couple of you have Cole Financial, as I mentioned right here. When I asked if you already have a broker, because you need a broker to be able to trade. So I only use Investagrams for charting, but I don't trade here. This is basically just a platform for me to, read the candles, see what's going on in the market or with the company. But if I want to trade, I would have, if you want to trade, you would have to open open an account with a broker. So we have, just to name a few, we have Cole Financial. You have Cole Financial, sign up. You could sign up on that. You could open an account. And then you also have like First Metro Sec. This is this is by Metro Bank. You also have by BPI Trade, just to give a few of the brokers out there. And then there's another one called Stocks. This is what I personally use. I use this broker. They're not associated with the bank, but yeah. So if you want to start trading, you will have to apply to a broker, and then you have to create an account. So yeah, for example, let's go with Cove Financial. See, there's open an account. And when you sign up for a broker, I think there's a minimum depending on the broker, the amount that you need to be able to invest or to open an account with them. Because essentially, you cannot trade without a broker. Because you can't just go in the PSE, the Philippine Stock Exchange, and be like, "Hey, I want to buy JFC Jollibee shares." Basically, the brokers will be the one to buy it for you because they're a firm. They're a bigger firm, so they accumulate everything, every order that the traders might have. Because we're just a single trader, so we're just a person, so we can't directly buy from the Philippine Stock Exchange. So these companies, these brokerage firms, they're the ones who buy it on behalf of you. So essentially, if you create an account, let's say I have my account right here. This is gonna show my password. But yeah, if I log in to my broker, one of the things I like about Stocks is you could open an account for only if you have like I think the opening amount is 5,000 pesos. So if I have 5,000 pesos, I could open with them, but with co-financial, I'm not sure how much it is. Is it 5,000? I'm not sure. Wait, let me ask my brother. Jay, how much is it to open an account on co-financial? Is it 5,000 or 25,000? It's 5K. Yeah, 5K as well. So co-financial 5K. 1K? 1,000 pesos. Minimum. Okay. So yeah, you'll see when you choose one of these brokers, you could take note of these brokers. So yeah, Cole Financial, they're a good broker. They're reliable too. First Metro Sec, BPI Trade. And then there's another one.
These are the popular ones. BPI Trade, First Metrosec, and then I have Philstock. So basically, they have minimum requirements, and if you search up co-financial opening an account requirements, yeah, you'll see these requirements right here. So you need like a valid ID, a TIN, because you will get taxed. You will get taxed on the trades that you make. Like you get a sales tax, and then by from selling, it's like basically buying and selling as well. So if you're a registered company or registered brand, when you sell, you would be taxed on your earnings. So yeah, if you buy and sell, you will get taxed. So that's why you need to provide a TIN. But if you're working, you already have that, so should be good to go. And then I think they will specify what is the minimum account. And then there's another one called AAA, the broker. They all have different features, but for me, they're just a they're just a broker because I don't do my charting there anyway. So I just buy and sell there. So basically, yeah, there are minimum amounts that you have to put in to open an account with them. So you have to consider that too if you're not planning to put in like a big amount right away. And then there are others that are like requiring me to put in 50K initially. But if I were you, slowly put money into it. I guess I could go get into that. Let's say you cannot put, um, let's say you cannot, oh, wait. Let me just send that to everybody. So let's say you cannot put a big amount just yet, right? So what you could do is, let's say you have work, you have a job every month after. This is a practical, practical advice now on financial, personal finance. There you go. So if you have, let's say, a money that you save up, I suggest you don't put all of your savings on stocks because basically stocks is like the money that you're extra lang. It's just an extra money that you have lying around instead of keeping it in a bank, you're putting it in stocks because in stocks, essentially you could earn more than what the bank pays you because the bank only pays you what annually they pay you less than 1% of interest. So even if you had 1,000,000 pesos in your bank, your 1 million would earn less than 1% after the end of the year. So in stocks, yes, it is more risky, but since you're investing, there's a potential for it to grow. And as I've mentioned earlier, the way you earn money in stocks is by like through price appreciation, also capital, also known as capital gains. So let me go back to my charting right here. So yeah, as I've said, let's say you invested. Let you raise. Let's say you invested 150K pesos, right, onto Jollibee, and you bought 1,000 shares. It's called capital gains because your capital basically grew from 150K to 210K. So yeah, basically to answer that question, you have to, if you want to start trading right now, you have to open an account with a broker because Investagrams is not a broker yet. I don't know if they ever will be, but it would be nice if they were a broker and then you have these charts already. So yeah, because like right here I have Phil stocks. I can show you my portfolio, I guess. I mean, not my portfolio, the platform. So yeah, as you can see here, this is where you buy and trade basically. So you have your money, your balance right here. If you had, let's say, 5,000, 10,000 pesos, it'll show here your balance. And then, because you can see this as well. If you go to Investagrams, if you go to JFC, for example, or let's see here, let's go to JFC. So essentially, you're going to JFC, right? You have these. Okay, here I haven't tackled this, but this is more so part of the next step, which is actually trading and how to find a company. If you guys still are willing to learn, if you are willing to still stick around, just raise your hand, and then I could move on to the next topic since you opened up about it. Unless it's too much already and you want to take a break. and then we could hold it for another session. But essentially, on a platform, I introed about this earlier. You see the current price right here, right? You see the current price right here at 202.4. And then you have all these volume, the bid and ask, and then the volume. Basically, what you have here, you can see this as well on Investagrams. I'll show it later. But yeah, if you have a broker, that's basically your access to buying shares from a company, a specific company. So let's say, excuse me, you're looking to buy JFC, right? So you want to buy shares from JFC because you want to invest in them. So let's say you opened a broker and you put funding already. Like you have to deposit money to open an account, right? You have to put money into the account, and then it reflects on your portfolio, and then you should be able to see your balance here. The platform changes for every broker. So this is my broker. You should be able to see your balance too on the other brokers for sure. But yeah, you'd have your cash on hand that you could use to buy shares. So now you're gonna go to JFC, as I've said. You type in your ticker symbol because you don't have to type the whole full name. So you just remember this part right here, the ticker symbol. So since we know JFC, which is Jollibee, I go look at it, and then so here's the current price, and then you have the bids right here and the ask. So basically, a bid price is what people are willing to buy it for. So you have 202.4, and you have 12,000 shares lined up to be bought right there. So as I've said, stock trading is like basically buying and trading shares, right? So you'd only be able to get shares by buying it from someone else, someone selling. So they'd be selling on their broker, and then you're buying from your broker. So you have 44 people right here. 44 people right here lined up to buy 12,000 shares. So if you divide that, quick math, it'd be like 3,000 shares per person on an average. So there are 43 people. One just got completed, and then they're all waiting for the price to go to 202.4, or someone to sell it to them for 202.4. This is actually a really expensive stock. So, but yeah. So they're willing to buy it for 204 pesos. But you have the seller side, which is the ask price. They're asking for 202.6 pesos. So basically, these two people are not in agreement. And so you're just going to have people queuing, right? Queuing for this price point, for this price range. And then since stocks is basically buying and selling, if I'm selling an iPhone to someone for a secondhand iPhone, to be at an 11 or 12, I'm willing to sell it for 40,000 pesos, right? If the other person doesn't want to buy it for 40,000 pesos, they could actually, bid for a lower price right here. Bid for a lower price. Some are buying it for 202.2, 202 pesos. You don't have to buy it as is, but if you're trying to sell it, trying to get out of your position, you might be willing to sell it to this guy buying it to 202.4. So, and then since you bought it at a cheaper price, you bought it like my example was 150 pesos. If you sold all your 1,000 shares to this guy for 202.4, you would have made money. And then this guy is gonna be like waiting for the next uptrend or something for the price to appreciate, because now he's the one holding it. So yeah, it's essentially buying and trading, and then the prices go up when the bulls take over, meaning that the people who are buying it are still finding value even on a higher price for this company or this ticker symbol, for example, for Jollibee. Let's say you bought it at 250, right? But then there are still people buying it at 202 pesos. So essentially, these people in between the prices of 150 and 202, people are still willing to buy it at a higher price. So they are willing to uh, buy it and then sell it again later on. So basically, yeah, people are still finding value. That's how price goes up and keeps going up. So you see the everything here is red. That means it lost value. So in a way, Jollibee right now is losing value since it opened. If you saw the candlestick earlier, it opened. It opened right here at 200. It opened at 203, I think. Yeah, this is the open price. What's the open price? Open price was 203.2. Yeah, you should be able to see this in your broker too. And then the close was 204 last Friday. So it actually lost value because people found it too expensive to buy. So essentially, yeah, if you're buying and selling iPhones, um, if you sold it for a second hand as a second hand phone, definitely you can't sell it for the original price, right? Unless out of nowhere people started valuing iPhone so much. Like let's say iPhone stopped making, for example, a vintage phone like an iPhone 3GS or something, iPhone 4. Let's say that's like now a vintage phone, but then you happen to have an unopened iPhone 4 in 2020, and then you're like, I want to sell this. So you could sell it higher than uh, than what you originally bought it for because people find value in that specific item or that specific stock. So like let's say today it could be worth 202, but then next year people will still find value in it and keep trading it, keep buying it, and then more people buy it than people sell it. It could still increase in price and people would still be willing to buy it. It's like as you can see here on the history, basically the Jollibee stock prices have come from this price point right here at how much is this? How much is this? 130 pesos. But yeah, I hope I answered your question. And then if you have a follow-up question on that, feel free to ask. But yeah, so yeah, you have to open an account first with a broker. That's the first step to being a trader. You have to have a broker first. Because before, um, just on a side note here, because before stock trading was a thing for the super rich, I would say. Like, because before, uh, if you were to trade stocks back then, like 50, 60 years ago, you'd have to actually have a person trading for you. You'd actually have to ask someone to buy it for you. Like you'd go to a brokerage firm and then there's a person buying it for you. You'd have to physically like tell him, oh, I want to buy 1,000 shares from Jollibee. But then now, since we have these online platforms, they went online. So now brokers, you don't even have to contact a specific person for at a broker, and then you could just buy shares. Because now you have these online platforms like Cole Financial, First Metrosec, BPI, Phil Stocks that are buying it on behalf of you. So you just have to invest money in it, put money in it, meet the requirement. And then what you could do if you cannot put in, let's say 1 million right away, you don't have to do that. But let's say you have savings, right? What if you put like 50% of your savings every month from your job? Let's say you get a paycheck every month, you put aside like 20% as your savings, and then half of that you could put into invest in your investment portfolio in your broker, in your account, online account. So yeah, you could invest, let's say, uh, I don't have a calculator here. Can I show you my calculator? But yeah, let's say you invest 10% of your salary every month. You're committing to investing 10% every month to your stock portfolio. You could do that. You don't have to put in right away like 100,000 or 500,000 or 1 million. You could do what you could do is like add 10% of your savings, 10% of your savings, or have another, section or in your budgeting, another section for investments where you put in 10% of your actual paycheck into or your allowance, for example. into the stock market. So you can do it slowly until you reach a certain price or amount that you're like happy with. But if you're gonna do this for the next 5 to 10 years, might as well keep adding, every month. Because by the end of a year, if you add every month, let's say, can I just share my screen? Let me change what I'm sharing. Desktop one. Okay, so I can show you my calculator. So yeah, let's say, can you guys see my calculator? Can you see my calculator? Can you guys see my calculator? Give a thumbs up if you can see my calculator. Right here. This is my calculator, sorry. Right here. It's called Numi. It's pretty great. But yeah, so you can see here, let's say your initial investment was 5,000 pesos, right? Because your broker required you to put in 5,000 to open an account with them. Let's say you could only invest 5,000 or 10,000 pesos when you first started. So you have 10,000 pesos to play with or to buy stocks with, to trade with. So yeah, you don't have to have a huge amount. And every month, let's say you're adding, 10% of your salary. Let's say your salary is about 50,000 pesos, for example. So 10% of that is 5,000 pesos, right? So let's say you're putting 5,000 pesos every month, setting it aside. You have your savings and you have your investment portfolio. So you're putting out 5,000 a month, and then you multiply that by 12. So now nope, not plus, multiplication, yeah, there. So now, by the end of the year, you'd have 70,000 in your portfolio to play with. But at the same time, since you already invested 10,000, you've been buying and selling shares. This 10,000 could have grown. Let's say you've doubled your money at the end of 12 months. Now you have 20,000. So while you're adding more money into the portfolio, you're already trading it. And then now you have these constant investments that you're putting in every month. Your portfolio is slowly going to grow. So, and since it's a compounding, so when you put in, now you could trade with that much money as a whole. So by the next month, you might have started with 20K, with 10K this month, but next month, let's say you earned 10% of your portfolio, you're at 11,000 next month, but then you're adding more money at 5,000 peso per month. So now you have 16,000 to trade with, and then it's going to exponentially grow. So you don't have to have a big amount just yet or account. But if if you're asking me personally about how much should I put in, I'd say 10K is fine. 10K is fine. 10K to 50K is fine to begin with. But yeah, you don't have to have a big account. You don't have to have 1 million right away to be able to trade in stocks, because you can open an account as low as 5K. So yeah, I think if you really want to buy, because trading stocks is about volume. So the more shares you could buy, the more you can earn. So in each of the stock, there's a minimum of shares that you could buy, that you're allowed to buy. And moving from the bid and ask, right? Moving from that question, that part. So you have the what people are willing to buy it for, right? But then you have the lot size. So you can't just buy one share. You can't just buy one share unless you're like a Globe, I think. I'm not sure. Oh yeah, Globe. See, Globe is like 5 shares. So in order for you to buy a 2,000 peso share, or to buy a position to own this, to be a shareholder of this company, you have to buy at least 5. So that's really expensive. So if you calculate it, I have my calculator right here. 2,000 pesos on a stock times 5, you have to spend at least 10K. So there goes your entire portfolio. So might not be wise to spend it on a really expensive stock yet. So What's a stock that you guys are familiar with? Let's say a cheaper stock, cheaper than JFC. Say like Ayala. You all know Ayala company. So yeah, Ayala Land. So you have Ayala Land. So there, since it's a cheaper stock, you'd have to buy more to get into it. So you have a lot size of 100. So you have to buy at least 100 shares of that. So now you have 41 pesos point 55 times 100 because you have to buy a minimum of 100. So there goes 4,000 pesos, right? So yeah, that's how you calculate your the amount you have to pay because there's a minimum number of shares that you have to buy in order to participate or be a shareholder in that company. So yeah, that's why you need a bigger account because you might want to buy more shares. So yeah, so over time, the number of shares, the more your account grows. Let's say after a year, now you have 80,000 as you've committed to like putting money every month. And since it's earning compoundedly, since it's compounding, what's the term for that? Compounding. Since it's compounding, because like while you're adding money, you're also earning from what you've invested. So now it just keeps rolling, right? So at the end of the year, let's say you have 80,000. Now, how many shares could you buy from Ayala? So if you divide this by 41, now you'd be able to buy almost 2,000 shares. When in the beginning, you were able to only buy, how much was this? Let's say you only had 10,000 pesos divided by 41.55. So at the beginning, you were only able to buy 240. So yeah, the more shares you have, the more profit you'll have because when you sell this, for example, you bought Ayala at 41, right? You sold it at 50 pesos. And then let's say you only had 200 pesos, 200 shares. So 50 pesos times 200 shares. Now your investment of, how do you call this? Let's say you bought 100 shares na lang pala. So para, because you don't want to dump all your money in one company. But let's say you had 100 shares, right? So uh, your money literally just went from your capital, the one you invested, literally went from 4,000 pesos to now worth 5,000 pesos because per share you earn about 8.5 pesos, for example. So per share that you held, you gained 8.5 pesos and you had 100 shares. So you basically gain 850 pesos. And when you sell these 100 shares, you sold it to these people that are here buying it. You sold 100 shares. You made 850. And then you could just re-roll that money. That's what I meant when I said compounding. So yeah, yeah. So the more you add money into it, the more your portfolio will grow. Obviously, the more you'll be able to trade and you'll be able to buy more shares. So any other questions that you might have? Do you also use indicators? If you do, can you give us a quick overview? This is a more advanced topic right here. Indicators. For me, let's go back to charting. This is a question on charting. For me, I don't. Um, let's just share the browser. Okay, so you can see my charts again, right? For me, good question. For all of you who might be wondering, my chart is so plain, right? My chart is so plain. Uh, let's see. Let's go back to let's go to JFC, for example. So yeah, I've saved the chart because in Investagrams, you could save a chart, right? So you have this line right here. Um, So you have these indicators. I want to make a separate tutorial for this, but there are so many indicators. And if you have your Investagrams with you right now, you have these indicators and there's so many. So yeah, what I mainly use, actually I don't use indicators. Uh, to be honest with you, I don't use indicators. I don't use this sometimes. So what you have here, what you can see here is this blue line, right? It's a moving average. It's called a moving average. You could find a lot of these tutorials for these specific indicators online if you want to get ahead. But essentially, what a moving average is, uh, it's a sum of, let's say I have this MA50. It's called MA50. It's a moving average 50. So that means there are 50 candles that they've averaged before this. So let's say I'm at this price point right here, right? I'm at 184. The MA is at 184 price point, where uh, that price point right there is the sum or the sum and then average of 50 candles right here. You can change the settings of this. This is one of the basic indicators, right? You could change the length of this. You could change it to, like, say, the last 10 days. Let's say I'm gonna have 10 days, right? So it'll move, it'll change, because it'll total the price changes, the closing prices of all 10 days prior to this price point. So let's say you're looking at this. Today is December 21. So they're gonna total 10 days before that. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So the past 10 days in this span right here, they will total that, and then they'll draw a line. There's a mathematics calculation of this online, but basically these lines changes depending on how many candles you want measured. So one of the common ones is the MA50. So it measures 50 days, because I'm on a daily chart, this daily chart, right? So it'll measure 50 candles, 50 days. So if you go to the 1 hour chart, it'll measure 50 hours. So yeah, it changes depending on the time frame that you're on. So this one is measuring 50 days. So it's averaging all of these prices in the last 50 days. When was 50 days ago? Basically 50 days. There we go. So 50 days is around right here. Is it 50 days? Is it 50 days from here? Yeah, let's say this is 50 days. 50 days from here to here. So basically it's averaging the price from 137 to 204. They'll add up everything every day. So it's increasing in price. You can see that it's going up in price right here. So you can tell it's an uptrend because the 50, MA50, it's going up. So this is for more of the advanced people that knows how to chart, like Carol. She's asking about indicators. But yeah, the MA50, for example, one of the most commonly used ones is they use that to show the average of how much the prices has moved in the past 50 candles prior to today's price. So yeah, this is a summation. So since you can see that it's going up, it means the price is going up. So the average is getting higher and higher. Yeah. But Carol, if you want to talk to me about that more, I could I could probably talk more about this on the next session, because right now this could get too complicated for the rest of the people. But definitely I'll hold another session and maybe talk about these things, or talk about the things that you research on, that you guys research on throughout this time, and then the next time we meet, if ever you're willing to come back. But I'll definitely hold another session. And I could talk about indicators, but basically indicators are tools you could use to, how do you call this, to refine or make more accurate trades, I guess. It's something that you could base your trades on, essentially, the indicators. So let's say MA50, right? It's indicating that the price is going up. So I'll be like, okay, I think this is a good buy because, the MA50 is going up. It's basically like when I drew a trend line, right? I connected this point right here with this point right here. When I connected it, I was like, I drew the trend line. So basically an MA is also a trend line. So, but then it's automatically calculated when you use it. So yeah, a trend line could act as a support. these MAs, the moving average, could act as a support. Let me show you a 200 version, 200 day moving average. So it's a 200-day average moving average. So on the past 200 days, the market has stopped going down because it's flattening out. But on a faster moving average, the market has already gone up. So there are here we go. Let me just show like a stock maybe um, that has it as a support. I think. Oh, basically here. Let me just zoom in here. Let me hide this MA200. So for the more advanced one, see the support, the blue line basically acted as a support. Like look, the line bounce right here. The line bounce right here. The line, it also bounced right here, but it maintained that. It basically kept that as a support. And I think I drew that right here. So yeah, I drew a support right here. So I saw it as like a price that it hasn't failed to be, that hasn't been broken in a while. I was like, okay, this is support. But you could look at the trend line too to act as a support. Yeah, so those are basic information about the trend lines or the indicators. These are one of the few because there are so many. There's another one called that are commonly used called the relative strength index. So basically, this doesn't say this isn't about the direction, um, but yeah, you can see how strong a stock is. So if it's going up, pretty strong, people are buying, so it's pretty strong. And then when it's going down like this, so it's losing its strength basically if it's going down like that. But yeah, that's gonna get complicated, and I was hoping to do this hopefully another on the next session. So I'll have to talk about that too. But personally, for me, if you ask me, I prefer not to use an indicator because at the end of the day, indicators are lagging. So and lagging meaning that it shows only the past. I mean, it won't let you predict because indicators just calculates what's already been there, what's already been written. The candlesticks, it's already been written. So it won't show you the future, but it's a good measurement of where prices could go back to or could go retrace to and pull back because they could act as support. So yeah. So if I choose a faster time frame, like let's say 10 days or yeah, 10 days, it'll be more sensitive. It'll react faster. So see, you could it acts as support, and then it acts as support right here. But then essentially, in a way, you could kind of predict it because like you're drawing a trend line. For me, this is more accurate. Like let's say you're drawing one point right here and another point right here. The price could potentially hit this green trend line because you're connecting the dot. But if it breaks that, now you're watching at another point, which is this, because this could be a support, as I've said, right? When we were talking about support, you know that there's a price right here that it hasn't broken and it didn't break here too and it bounced up. So if the trend line doesn't act as a support, prices could potentially reach this and bounce up. But then if it doesn't, we can never tell. So it could go down here too. Yeah. So yeah, we can't tell where the market's going, but in the next few sessions, I'm hoping to share how we can actually catch these uptrends and how to actually trade. But yeah. So I just wait. So basically, I just wanted to share about like the basics of it, and then the benefits of trading, I guess. So yeah. Any other questions that you might have? Because if not, I think that's the last of my. I don't have any more in my presentation. Yeah, that was the last of it. Let me just check my notes. Man, that was almost, that's 2 hours and a half. And then you might be wondering, like, how do you pick a company, right? You guys want to know about that? Are you guys still down to like learn more? Are you guys still there? But yeah, I hope you picked up something from the past hour or 2 hours or so. But yeah, to answer your question, Carol, yeah, indicators are used as like indicators. Let's see, let's Google it. Stock indicators uses. So basically, it's a guide. It's like yeah, analytical data, technical indicators. So yeah, there's so many, but then for me personally, I don't want to get too caught up with that. So I like to keep my charts clean and not have anything. Like if you will see my main charts, um, and if you follow me on Investagram, if you've created an account, I usually post them too. I sometimes post them on my feed. So yeah, what I usually do is just look at the chart and then draw potential areas of support like that. Like a uh, quick thing you can do. Yeah, I draw, look at the support where has prices failed to break through right there. Where has the highs been? Yeah, I draw my highs, and then I'll just draw like a point right here. Because I'm like, oh, point one, and then another point right here. So I might just put that there. So essentially, this one broke it for this specific company. This one broke the trend line. So yeah, here's what could happen. Like potentially could happen. Like as you've seen with what's that? JFC earlier. We don't know what could happen with the prices, but since I was like connect these trend lines, right? I mean these points, what could happen was potentially it bounces here or could break this. So now, since this is an uptrend, right? Because you have a trend line that's going up, if it breaks that, it could potentially go in a range, like what we were talking about earlier, like consolidation phase. Because like the bulls and the bears are not sure whether they want to take control yet. So I don't know. I can't tell the future, but you have these indicators, um, these trend lines, these arrows, these I don't know points that I drew as a support. You have these things to pay attention to when you're trading, so that you know if it was wise to buy in this company or not. But yeah, all right. No worries. If you need to go, feel free to do so. But if you have more questions, uh, feel free to ask. But yeah, for now, I'd say that's it. I just want to thank you all for coming. And if you have specific questions, should we have like a how will you reach me? Well, you guys have my Instagram, the art of trading on Instagram, or if you created an Investagrams account, you could reach me there. You guys could reach me at the art of trading everywhere. So that's my username for this for my trading um, platform. So yeah, if you want to follow me on Investagrams, that's my username. And then all right, and then yeah, and then you can message me on Instagram or Investagrams if you have other questions. But so far, I just want to hear from you guys. I guess just to close it, what are like a thing or two that you know that you were able to take from this session, just so I know what I need to like change up, what I need to explain more on for the next sessions. But yeah, if you guys could comment like a couple things, if you're still unwilling to open your mics, no worries, no pressure. But yeah, that's it mostly for me today. and I will make an announcement for the next one. If you guys, yeah, if you want to rewatch this, since I asked if it was okay to be recorded, right, the session. If you want to rewatch this, I'll be uploading it on YouTube. And if you had something that you missed and you want to rewatch, yeah, if you want to rewatch what we've just tackled, you can, yeah, you can keep it on a loop. I'll put timestamps where you could go back to. Like, let's say if you had questions on, trend lines or how to draw support and resistances. Those are the main key things: support, resistances, highs, lower highs, or highs, lows, higher lows, lower highs. Like those terms, you'll just probably get used to it. Yeah, but I'll upload this on YouTube. And if you want to rewatch some parts, you could. Yeah, you're free to do so. But yeah, I hope I was able to answer. Now you know how to start trading. Yes, there you go. Well, that's just the beginning, but I hope to talk more about my workflow, I guess, or my daily routine. Like, how do I know? If you want to know how I actually choose my companies, uh, stick around, uh, follow the socials, and then I'll update you guys for the next session, because I'm hoping to have this once a week. The other times might be less formal than this, so I'm hoping that we could actually have an interaction on the next one, since now you know a little bit more about the jargons that I use. Yeah, and you're welcome. You're welcome. But yeah, now you know a little bit of the jargons. Um, Let me just. What are the jargons that we use today? Like candlesticks, downtrend, uptrend, the bulls and bears, consolidation. I'm just typing it out, so in case you want to research more into it, you're free to do so. But I'm hoping that I was able to share or point you towards a direction where you could actually, get a little grasp of things, and you could search things on your own. Since I'm pretty sure like half of you or most of you are interested in doing this for a while. So yeah, candlestick, downtrends, uptrends, the highs, supports, and resistances, and highs and lows. How to identify them. So yeah, let me just send this to everyone. If you want to take copy paste it on your notes, that's what we were able to talk about today. So yeah. Oh, we were bid and ask. I'm going to expound more on this when I talk about how I actually trade. Bid and ask, volume. And then you could start searching on indicators, but this is where things get complex and complicated really fast. Like indicators, when you search about that, indicators and patterns. So I'm hoping to maybe talk about that through my posts and through the next sessions. But yeah, these ones. I will post the YouTube link, yes, on IG, on the description. Hopefully, yeah. I'll make sure to note the description. I mean, the link on the description of the post or the caption. Description, caption, yeah, caption. So yeah, I'll post the the entire thing, or maybe I'll chop it up because there are some parts that are like just hi, hello. But yeah, I'll definitely have the important parts there. So yeah, or you might see it on Instagram, like a chopped up version, highlights. So it's faster for you to watch. Be like, okay, yeah. Anything else? Looking at this. So yeah, the next session. Oh, it's Christmas week. Well, Merry Christmas, everybody. But yeah, it's Christmas week this week. So there's like a holiday on 24th, 25th. So this trading is gonna be stopped on those days for for a couple of days. So yeah, most likely next week things are gonna go back to their usual. So I say the next session might be next week. I'll announce on that on the IG. Yeah, I think I'll just keep the IG um, updated the most. Maybe Twitter, but then Investagrams for sure. If reminder for you guys: create an account on Investagrams, and then I could maybe talk to you about how to set up your Investagram, how to set up. Would you guys like that? Leave a thumbs or like a response. Yeah, how to set up your Investagrams, because it's or how Investagrams work. I could talk about that. How to set up your Investagrams, how it works. I could talk about it on IG or next week if you can wait. But if you want to go ahead and dive into it by yourself, you're free to do so. But yeah, it could get overwhelming at first. So yeah, how to set up your Investagrams, and then how I actually trade. What are the steps to my trading? Uh, Steps. There you go. How Faces of the market. Oh yeah, reminder. Also, we tackled faces of the markets. Yeah, so as you can see, the market right now, basically PSE is like the summation of everything, right? As I've said. So we can see that PSE is actually on an uptrend right here. So yeah, no, we have a good market right now. It's in an uptrend, but it's slowing down since it's failing to break this high. As I've said, this is a high, right? So I've talked about earlier. So yeah, it's failing to break this resistance. I like to draw my resistances on red because it's a high price, and I like to draw my support on green. So yeah, I just make it green just cause I don't know, green. But yeah. So yeah, it's might go on a range. The market might go on a range right here. So yeah, it could probably go. So if you start trading now, here. Just a note. If you're gonna start trading now, I suggest you don't start trading right away. Like just open an Investagrams account. You could watch the market. But you could go to click this. If you click this, I think where's the virtual? Oh yeah, here, virtual trade. This virtual, that's hard to say. Yeah, virtual trade. You could go and sign up on Investagrams for free, right? And then you have a virtual trade right here where you could actually practice buying and selling stocks yourself. So yeah, let me just reset my cash. Let's say I'm willing to invest 20,000, right? So yeah, I'll play it as if I have this amount of money. So I go on virtual trading and then practice there first. I wouldn't I wouldn't I wouldn't advise I wouldn't advise you to sign up for a broker and then invest 50,000 and then just buy anything. No, you might just lose all your money because at that point, since you don't know most of it, much of it, it'll be like gambling basically because you're going in, you don't know much about what you're doing yet, and then it might be too risky, more risky. So basically, yeah, I guess a good summation of everything today is when you start learning how to trade, how to chart, I mean, it will become less of a gamble to get in. It'll be less of a gamble to get in because you have a strategy, you have the analysis that you have, the being able to read the charts. Yeah, so it'll be less of a gamble. What what short selling? That's not available here in the Philippines, but as I've said earlier, short selling is like you're betting. In short selling, you're basically earning money when the market is going down. Because here in the Philippines, uh, you don't make money; you actually lose money when the market is going down. So in the U.S., there's short selling. So basically, you buy shares of a specific company, and you're betting that the price will go down instead of go up. That's the gist of it. Because for here in the Philippines, we're buying hoping that the prices will go up, right? So in the US, you could short sell and it'll be like, yeah, you're betting that the prices would go down. But yeah, that's it mostly for today. If you have any last question, feel free to ask. Yeah, that's most of it for today. Any other last questions? So yeah, hope you guys learned something, picked up something from that. It's just the beginning. There's really more to it, but I'm thankful that you guys gave me a chance to share about this. And one of the main reason why I started doing this was because I also want to help other people, because there are a lot of people actually are getting in the stock market, and the common perception is, oh, the stock market is risky. The stock market is very dangerous, and you can lose money. Yes, you could lose money. You could lose your investment, but the more you uh, study about it, the more you make yourself more literate about stock trading, the less it will become risky, or the less risky it will become for you, basically. And that's what I want to share. That's why I asked you guys about the perception earlier, the common perceptions, because when I started trading, I was like, stocks is very dangerous. Like, it's only a thing for like people with a lot of money. No, not essentially, because now you have these platforms where you can start with a smaller amount of money, and anyone basically can trade. So yeah, and since there's an influx of people now interested, I don't want you guys to be one of those people that just trade and then end up hating trading because you're losing money, and then you don't know what's going on. So yeah, at least when you know what's going on, you have a chance to do this for a longer period of time, uh, instead of, yeah, I think that's also one of the reasons why uh, I quit before, because I started trading, as I've said, when I was 15, 14, maybe even 13, when I started reading the books. But yeah, I did not stay in it, because even though I made money, but because before I couldn't figure out what was going on. I didn't have these tools yet. Investagrams wasn't a thing yet, so it was really tough for me to figure out what was going on. So that's why Investagrams, it will be your friend. It will be your friend. Yeah, I don't know. It's a great platform. It's a great platform to know, uh, to be able to see the charts. Because as I've said, some brokers don't have good charts, don't have good charting tools. But yeah, with um, with Investagrams, they're offering it for free, and you could potentially make money from it. And it's a free website. Like, it's a free platform to learn how to chart, and then to chart, and then make your trades from there. But yeah, so if you don't have a broker yet, I suggest researching on a broker. Yeah, research on a broker. Um, if you have questions about a broker, you could reach out to me on my Instagram. You could send me a DM on Instagram asking me if uh, for the best brokers, I guess, or if you find a broker that you like. Let's say you're with BPI, you have an account on BPI, savings account on BPI. You could open an account on BPI, so you can easily transfer money. But now all the brokers accept funding from bank transfers, almost from any bank. Like my account is on Philstocks, but they're not with a bank, so I just deposit money into it through BPI or BDO. So yeah, it's become easier now to continuously fund it. Um, yeah, yeah. You could reach out to me on DM if you're wondering about a specific broker. But yeah, my top brokers are the ones I sent above, not chronologically ordered. Like, but yeah, Co Financial is good. First Metrosec is good. BPI Trade is good. The stocks is good. There are other ones like AAA. Not sure what else, but yeah, those are the top ones. Anything else that you guys might have questions on? It's already 11:25. Wow, we did a 3-hour session. Yeah, the market closes at 1. So yeah, you have to wake up early. You have to wake up early if you wanna start trading. So yeah. But yeah, I suggest you start with virtual trade first. And then if you wanna dive into investing. I don't want you guys to lose your money at first because I did. Last June, I invested like 10,000 or 20,000 pesos first. And then I think I lost money for a bit because I was just like buying at whatever price. It's like buy now, okay. So I had to like endure times when I was like down X and X amount of pesos. But yeah, I suggest you don't go in yet. I say practice for like a month or so. Practice for a month or so before you start um, using real money. You might want to watch the market first, like understand the support resistances, and then next session I'll actually talk about how I get in, how I trade. So yeah, stay tuned with that. Anyway, it's almost 11:30. I should let you guys go. If you don't have any other questions, I will stop my screen share. How do I stop my screen share? Stop share. Oh, there. So now you only have my face. But yeah, if you guys don't have any more questions, that's it. That's it for me. Thank you once again for coming. Uh, if this was not boring, give a thumbs up. No, the people say I'm a boring speaker, but that's just how my voice is sometimes. Like it becomes monotonous. But yeah, yeah, that's it for today. Thank you for coming. Hopefully next time, we get more people in. But yeah, you guys are like my trial test teaching run. This is my first time teaching for yeah, about something. Is it? No, I mean I've tutored people, but you know, teaching like this is a new thing. Like you guys actually have to look at me and like this guy must know what he's talking about. I try my best, but I'm sharing from personal experiences. I'm sharing from uh, personal learnings because I'm self-taught. I taught myself about stock trading. I was just watching a lot of videos. I don't know if you saw my first post on Instagram, but yeah, I must have watched a couple hundred videos just to like find out about my style and my trading style. But yeah, I'm hoping that I could teach you guys about it too, like to figure out your style on trading in the future. And I'll talk more about my style on trading, like what kind of trader I am. I'll also talk about that next time. Yeah, this is just a crash course for the people that might not have known what the stock market is or how the stock market works. But then now at least you guys have an idea. We'll dive in deep more into that next time. Yeah, if you follow my Instagram, you should be pretty much updated. I hope to post there more often and grow it out more of us, more people who are actually trading. But yeah, should I create? Oh, last question. Should I create like a Telegram group or like what's a good platform for a group message? I don't know if Messenger is good, but we do a Telegram group, Viber group, or Messenger group. Like, I feel like Telegram's the best. I don't know. I prefer Telegram more than any of the other messengers. But what I'm hoping is if we start a group, the more people come in, it'll be like a more direct way to talk to me. And if someone asks a question or like if I post something, at least you guys will know at the same time. And yeah. Should I create a Telegram group right now? Or should I just I'll post a link. I'll post a link on the Instagram page if I have created a group. Because I think you could have a let me see. New group. This is on Telegram, right? New group. Uh, can I do like a link for a group on Telegram? Can I share a link to a group? Um, or do I have to like have you guys as a friend on Telegram to be able to add a group? Or can I just send a link? How do I send a link? Members. Ah, there. Invite group via link. Oh, copy link. Done. Okay, here you go. To everyone who's here, I guess. Here, let me post the link so you guys can join right away. It'll be easier for me to send a mass message out to you guys. Why is my Telegram not updating? Wait. Okay, here. Copy invite link. Here you go. Because the Zoom chat disappears, right? So yeah, so I could forward notes there and whatnot. But yeah. No, because channel, if you create a channel, I think people cannot respond.
Yes.
That's the thing. So I think a group is better. So yeah, if you have Telegram, or if you don't have Telegram, I hope you could make an account and then, yeah, there you could join. The Telegram link is right there on the chat before you guys go. So, yep. So if I don't have you as contacts, at least you could join the Art of Trading. Yeah, it's called the Art of Trading, the group. Let me see. Were you guys able to find it? Or are you guys downloading Telegram? Let me know if it works. Da, 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 da. I've never created a group like this yet, so I don't know if it works, but it should work. Oh, there. It does work. Yay. There we go. It works. Huh? Hmm. It works. Yeah, the group works. Yeah, if you could join. Yeah, I guess that's the last of it. Anyway, I hope you guys all have a good day. Time to grab lunch. And yeah, thank you for participating. And I hope next time, um, yeah, you guys could join me on the voice, then voice call. I mean voice. Yeah, and then you could ask more efficiently. But yeah, thank you for coming. Thank you for waking up at 8:30. I don't normally wake up at 8:30, but I think this is the right time to change my sleeping schedule again, since yeah, I want to be able to help as well before the market even opens. And then when the market opens, when we're all like up to, I don't know, when you start trading, I guess, or when you learn more about it, when you're ready to trade, I guess there we could all look at the market together, and then we could all share our insights and analysis and whatnot. So it won't be like a one-way connection, one-way conversation anymore. So yeah, all right. Thank you for coming. You guys have a good day, and yeah, that's it. I hope to see you guys on the next one. It would help. Uh, it would help if you tell all your friends too who might be interested about this. So yeah, so they could follow it and watch this session on YouTube and then get up to speed with what we have talked about. So yeah, if you know anybody who's interested, feel free to share the link later. I should be able to have it uploaded later tonight or tomorrow, but I'll definitely message on Telegram, or the post will be up on Instagram. But yeah, the main use of Telegram would be just for you guys to ask questions that might be useful to the group. And then for me later on, if I have a chart that I want to share, it could be there. I mean, what my vision is. Well, yeah, I should also talk about my vision and mission for this platform. Um, but yeah, my mission and vision is to, see everybody being able to trade and not relying on, hopefully slowly over time, not just relying on, let's say, what I say. For example, let's say I'm not gonna say now, oh, buy JFC, buy Jollibee right now. No, I don't want that to be a thing, because some people who are trading, they're always just waiting for like a stock recommendation. What should I buy? What should I sell? I want you guys to be able to independently make your own trades in the future. So yeah, I'm hoping that in the future you could also be able to like share your own analysis if you figure out your style and your preferred method of analysis and trading. So yeah, hopefully we all become more financially literate when it comes to trading or stock trading. That's the goal. Anyways, I'll let you guys go grab late brunch or have lunch. And I'll see you guys when I see you all. Merry Christmas to everybody. Enjoy your time with your families if you're traveling. don't go out too far. I don't know if it's safe yet, but yeah, it's pretty tedious to travel and it's kind of dangerous. But yeah, I miss those. I miss those traveling for Christmas or for the holidays. But yeah, Merry Christmas to everybody. Have a mm, have a good one, and I'll see you guys next week. Hopefully, if you guys are still going to participate. But yeah. All right. I'll see you guys. I'll end the call here. Bye bye for now.
Thank you, Japhet. Bye-bye.
Bye bye. No problem. You're most welcome.